Good afternoon and welcome to the marketplace. Coming up this afternoon, city's high rates of depreciation slows significantly this week after more than $300 million injection from the Bank of Ghana. Also coming up, newly appointed CEO promises to prioritize welfare of farmers after meeting stakeholders yesterday.
And so, I mean, they ought to be central in our decision making. And we also need to prioritize their welfare. And so that's what I mean by putting the cocoa farmer at the center.
Ghana says $1.4 billion since it started exporting crude oil in commercial quantities in 2011. This and more coming up this afternoon here on the marketplace. That was the update from the currency market and how the Ghana cedi is faring against major global currencies. Now to other business stories. Government has announced it has finally reached a memorandum of understanding with its official creditors committee, which has been signed by all participating creditors within countries. Finance Minister Ato Forson disclosed this at a news conference in Accra today, adding that this will result in a relief of 2.8 billion cedis.
According to Dr. Forson, this particular process was being commenced by the former finance minister, that is Dr. Amin Adam. Now, as part of Ghana's IMF program, there are certain thresholds Ghana is supposed to meet, and one of them is actually having its debt to GDP ratio being reduced to beneath some 55% by 2025. Dr. Ato Forson said the government will continue to work closely with these official creditors committee to, sign the agreement anytime soon.
One of the key elements of the debt restructuring was the signing of the Memorandum of Understanding by the official creditors committee for Ghana. The former Minister of Finance, the Honorable Mohammed Amin Adam, commenced the process for the signing of the MOU by individual members of the official creditors committee in June 2024. Distinguished ladies and gentlemen, I'm pleased to announce that following His Excellency the President's directive, we have made significant progress in Ghana's external debt restructuring. On the 17th of January 2025, I, in my capacity as Minister of Finance designate, met with Ghana's advisors and the technical team of the Ministry of Finance to discuss the state of affairs, create a timeline, and outline action plan for implementation. Since then, the Ministry of Finance team have worked tirelessly to advance the President's directive. Ladies and gentlemen, today marks a significant milestone from the team, and we are pleased to inform all Ghanaians that the Memorandum of Understanding, reached with the official creditors committee last June, has now been fully signed by all 25 participating creditors countries. We are grateful for the official creditors committee's members, their commitment, and particularly the committee's co-chair, China and France, for their support and assistance to Ghana throughout this process.
According to Finance Minister Dr. Tuforsen, government is working assiduously to cut down expenditure and also to make sure that all key macroeconomic indicators are being put in proper order. For Joy Business, James Eshen.
Now, moving on, the city's high rate of depreciation against the dollar since the beginning of this year has slowed significantly. I'm joined in studio by my colleague George Wiafi to give us the background of what is happening on the currency market. George, what's going on?
So a lot of things are happening in the currency market, but for the benefit of our viewers, let's give some background to this situation. If you look at the fact that since the beginning of this year, actually, the Ghana cedi has depreciated by some significant amount, but it began depreciating actually from the beginning of this year after holding its strength against the dollar since maybe October or early November 2024. Now, in December, we should look at the bank's rate. It was doing somewhere around 14 Ghana cedis, 60 pesos to the dollar in December. Now, what is causing the problem now? Now, just some background. The challenge with the Ghana cedi is purely a supply and demand issue. So if there isn't enough supply, then it will have an impact on those who are demanding the dollars that are limited. More people would now be looking for more Ghana cedis to get that same value. We do not print dollars in this country. So just to establish some grounds for our discussion as well. What has caused that? We are talking about limited supply of dollars. You also had the fact that there was surge in demand by businesses who were demanding dollars to finance their like stocks. So for instance, a company like Joy FM is saying that for every year we need cameras or we need microphones to change our microphones. We are not going because of the problems with the city. We don't want to wait till maybe even June or even March. So we are trying to restore for the full year. Therefore, people are front-loading their imports for the year, and that has seen a surge in dollar demand by businesses. And that's why you're seeing the bit about the surge in demand by businesses to finance their imports.
I see a 2.5%
So,
depreciation
yeah,
rate.
depending on which numbers you're using, some might say that it's even higher than this. Now, if you want to work with the Bank of Ghana rates, they are saying that from the first weeks in the month of January, the Ghana cedi has depreciated by some 2.5% since, that is, the beginning of January. If you try to compare that to 2023, in this week or maybe 3 weeks or 4 weeks for the first month, the cedi has done some 1.3 depreciation. So you could see that really the cedi is under pressure when it comes to January 2025. So what has caused the marginal, let me be very careful with my choice of the significant slowdown in the rate of depreciation that we saw in the previous weeks. Then I bring about the issue about the demand and supply thing. The argument that the Bank of Ghana has not been on the market for quite a long time. We understand that somewhere around last week, they pumped in $320 million. That improvement in supply has seen the cedi's rate of depreciation slow down significantly. And now the cedi, if you could look at just a week ago, it was doing somewhere around 15 Ghana cedis, 70 pesos. And this even among the commercial banks. It has come down to 15 Ghana cedis, 25 pesos, according to the rates that some of the commercial banks are quoting right now.
Some have said that why wouldn't the central bank allow the cedi to flow at its normal rate of depreciation instead of market intervention consistently by the central bank?
So you cannot have an absolute free market. There would always be a case where there'll be some level of market intervention. In a market where we've actually ceded most of our dollar supplies to the Bank of Ghana. So obviously, there should be some intervention from the regulator to try and slow the rate as well when it comes to its performance. If you look at the Bank of Ghana's reserves ending last year, about $8.9 billion, they might be in a strong position to support the Ghana cedi, Winston.
Judge Wiafi, we appreciate this insightful analysis here on the marketplace. We are now being joined on Zoom for more analysis on this with currency analyst Courage Boti. Courage, welcome to the marketplace. From where you sit, what do you make of the current performance of the cedi in terms of the rate of depreciation as well?
Oh yeah, I mean, we started the year obviously on a weaker note, and George surmised it quite correctly. front-loaded demand, and then the letters of credit that were established in the lead up to the festive season being settled. And of course, Bank of Ghana towards the end of the year was on the market to support with some liquidity and all that. Thereafter, it dried up, and of course, the exchange rate would trace it part back to where it's coming from. All of those were at play. So the issue is more a liquidity issue. The fundamentals seem to be improving. We're seeing inward remittances at record levels. We're seeing portfolio reversals kind of diminishing to a very large extent. We've seen the current account in surplus. We're recording trade surpluses as well. Overall balance of payment is in surplus. I mean, and the healthy ones at that. So it just tells you that it's a liquidity issue. Previously, unlike when we had a fluid bond market where portfolio investment inflows on a weekly, monthly basis on the secondary market and primary market, it's liquidity to the system, and then banks can trade freely. Now it appears that Bank of Ghana would have to come through with significant interventions on a regular. And so you see correction starting this week because I think since sometime last week, Bank of Ghana has come to the market 3 times on the spot market to even out volatility, doing averagely 150 million each time. And it is those flows that are coming in that seem to be quelling the pressures we're seeing a bit and translating into the kind of performance we are seeing at the start of this week, really. So it's a liquidity issue. It's about how to sustain liquidity flows to the market and how to ensure that there's a predictable path going forward.
What will be the immediate impact of this action of the city, possibly on businesses?
Well, I mean, so yes, depreciation and now a bit of correction. Yes, we expect some amount of depreciation along the year anyway. What businesses will want is levels of depreciation that are predictable, that are not out of the roof, so that they can plan and prepare. And you know, if you are not too certain how it's going to go, then you are forced to front load your demand, and that puts a lot of pressure on the exchange rate and pricing and inflation and everything that is connected to it, really. So for me, yes, there will be some depreciation, but it's the predictability to it. And if it's not too alarming, if it's within the normal ranges we expect, which is a relative sense of stability, then the impact on businesses should not be too alarming because you would have prepared for it and all that. But if we are going into 15, 20%, 25 annual depreciation, then yes, that is where the concern is from it. So for now, I don't think there is room for any cause for concern or panic necessarily. There will be movements and there will be up-down movements. It is when government is fully formed and we know what they are positioning on some of these things, what interventions are coming, then we can tell what our look is, and then we can be able to predict what it will impact businesses. But at this moment, 2.5 or so percent depreciation year to date sounds like a lot. If you analyze it, you should be getting to 20 plus, but it's start of the year. The seasonal pressures are there. Let's see what end of Q1 brings, what the policy interventions are. Then we can talk properly about the part of city performance.
Now, speaking about Q1, we've seen the central bank maintain the policy rate at 27%. How is the market reacting to that announcement? And basically, in terms of inflation, what should we be looking forward to?
Well, I'm not sure anyone is surprised. In fact, they could have a hiked rate as well, given the dynamics of the outlook for inflation. I think they chose to play it safe. Perhaps we've seen some correction in the city late last year, and then the lag impact of that will filter into inflation maybe in January and potentially February. I think that is what gives them comfort that keeping the rate is the ideal thing to do. It doesn't rattle the market in any way. I think it's a usual, normal course of action. And so we're taking it in our stride. In terms of inflation and an outlook for it, in the moment, you could see a bit of pressure around inflation. We need to see how exchange rate to evolve going forward. We know there are food price pressure issues, or fuel prices are going up at the pumps. We know utility tariff issues are coming up and will come up. And in September, there is a major utility tariff review coming up, and all of these have inflationary consequences, really. So I think the monetary policy stance going forward will be one that is appropriately tied to try to bring inflation back to the if you like, the target. And now the forecast horizon, as we understand, is shifted outward a bit to Q1 2026, which I've always thought that the 2025 and 2025 timeline for 8 plus or minus 2% was overly ambitious. So we would see between now and then what the change in the monetary stance will be, because the composition of the monetary policy committee will change with the possible exit of the governor in the coming month, because his contract is about ending and all that. Government to appoint new people to the committee, which will change the complexion. So the direction we would have to tell after the new team takes over, and then that is where we will get a clearer sense of what will be done to rein in inflation. But I think there are noise around inflation that need to be curtailed, and monetary policy would have to be cautious within the period.
Thank you very much, Kari Boti, for that analysis here on the marketplace. We have more business update for you here on the marketplace. Stay tuned right after this break. We'll be right back. Welcome back from that short commercial break. Ghana has been able to save some $1.4 billion since it started exporting oil in commercial quantities. This was captured in the country's petroleum account with the New York Federal Bank. The following report has more.
These are funds that the country invested as a result of earnings from crude oil exports, as well as returns on investments. In 2023, the savings was pegged at $1.2 billion. The Heritage Fund, which the country's petroleum laws requires government to save some of the oil revenue for future generations, had about 1 billion cedis. It, however, increased to $1.2 billion in 2024. The Stabilization Fund, which is supposed to cushion government's budget in years when petroleum revenue are declining, also had $190 million in 2023, shot up to $196 million last year. The account showed that the amount that Ghana has been able to save went up from $1.2 billion in 2023 to $1.4 billion in 2024. However, some have also raised questions about the country's petroleum laws in terms of where and how these funds can be invested, looking at the current returns.
Coming up in some other stories, Guinness Ghana is downplaying any negative impact of the operations on workers. This was after it announced that it has reached a deal with French beverage group Giant Castle to sell 80% stake in the business to the firm. There is more in this report.
Guinness Ghana, in a statement, noted that despite the plan to sell 80% of the business, nothing much would change in terms of the structure of the firm. It added that they don't envisage any changes to their operations as a business, whilst downplaying any negative impact on workers of the company. The brewery giant also noted that under the agreement that they have entered into with the French brewery group Castel, they will allow the company to continue to brew, produce and distribute Guinness and other Diageo brands. It also promised that Guinness Ghana will continue to list on the Ghana Stock Exchange despite the planned takeover. Guinness Ghana has also agreed to sell 80% of the business to Castel for more than $80 million.
In other developments, the Institute of Economic Affairs is predicting an inflation of 15% to 17% in 2025. This would be higher than the International Monetary Fund's forecast of 18% and the Bank of Ghana's target. There is more in this following report.
Guinness Ghana, in a statement,
bi-monthly economic outlook, the IEA said inflation should be reduced even further through stronger intervention measures. The year 2024 ended with inflation of 23.8%, slightly higher than the rate of 23% recorded in November. The end-year inflation was also higher than the 18% projected under the IMF-supported program. Throughout the year, inflation remained stuck in the low 20s, far above the Bank of Ghana's target of 18 plus or minus 2%. Under the IMF program, inflation is projected to drop to 18% in 2025. This would imply a drop of 15.8 percentage points from the 2024 rate. This drop, the IEA said, would however seem a bit optimistic given the poor historical record. It therefore alluded that a more likely outcome would be 15 to 17%.
Moving on, the newly appointed Chief Executive of Ghana COCOBOD, Dr. Randy Abbey, has stated that farmers will be priority in the financial issues of the board. He explained that there is an urgent need to redirect the finances of COCOBOD to compensate farmers for cultivating the product. The following report has more.
Engaging stakeholders for the first time after his appointment, Dr. Randy Abbey told farmers they will be the focus of COCOBOD. He assured that farmers will be constantly consulted to seek their input in decision-making.
They are the practitioners. They've been involved in this for decades. And in every policy that we craft, in any decision that we take, we need to have their inputs. And so, I mean, they ought to be central in our decision making. And we also need to prioritize their welfare. And so that's what I mean by putting the cocoa farmer at the center of what we do here.
In addition to the plants, Dr. Abbey announced that he intends to start large-scale farming to help curtail the declining production.
Well, there are some things that have been started. For example, the issue of rehabilitation of some of the farms. We need to intensify that. We first of all need to fully understand what is going on and to intensify it as well. We need to work together with the farmers to see how we can increase that. There's also the issue of also prioritizing large-scale farming. If you look at Cote d'Ivoire and some of the Southern American countries, there's a certain focus on large-scale farming. So yes, we have depended on our cocoa farmers who do a lot more small-scale for decades. I think that we also need to begin to prioritize large-scale farming, whilst we're also looking at the aging farms. We are rehabilitating the diseased trees and all that. We need to seriously look at how we can incentivize people to collaborate with us to get into large-scale cocoa farming to also augment what our hard-working farmers have done for this country for decades.
The spokesperson of the Ghana Cocoa Coffee Shea Nut Farmers Association, Imoro Isifu Al-Hassan, outlined some areas that must be quickly looked at to restore growth in the cocoa sector.
However, you have come at a time the cocoa, coffee and shea nut sectors are facing huge challenges that must be tackled immediately. The challenges include, but not limited to, declining production, low incomes for farmers, persistent threats from pests and disease on the farms. Another major threat that has significantly affected cocoa production is galamsey. These issues and others remain critical priorities for us, and we look forward to working closely with your office to tackle them effectively. Cocoa production, as you have indicated, is at its lowest ebb, unprecedented in the annals of cocoa production in Ghana. From a production level of over 1 million tons to below 500,000 tons as we speak is sickening. For production to sink this low calls for urgent need to tackle these challenges head on.
That's all for business here on the marketplace. For more business update, visit my Joy online /business. Let's go to the page and you see mobile money transactions hit record 3.019 trillion Ghana cedis in 2024. Also, the Bank of Ghana intervention alone in forex market cannot ensure lasting steady stability. Just coming through, Ghana saves $2.86 billion in debt service relief as it secures final MOU with official creditors. Just visit the site and you'll get amazing business story there on My Joy online. My name is Winston Taki. Thanks for watching. Have a good business day. Bye-bye.